Hello, welcome to Spy Money. I'm going to talk about indicators, how to put them on the chart, how to install them, and most importantly, how to use them. So we have an indicator button here. You can click on that, or you can right-click your chart and go to indicators. And there's some favorites that I like that I'm going to go over. I guess the first one we come to would be the Fibonacci Retracements. And let's see, where is that? Or Fibonacci pivots. And when I put those on, I use the default settings. That's fine the way they are. And go ahead and add them. Now, the one thing about the retracement or the pivots is if it is above the main pivot, your yellow one right here, then it's a long. If it's below, it's a short. That's a good way to look at it. And it depends on how you have it set up. This is a 60-minute chart. We're going to drop it down to a 5-minute. And it doesn't matter what time frame you're on, the pivots stay the same. So if you go to a daily, then, well, the daily, they don't show up. If you go to a 15-minute, we're at 37.2650. And if you go to 5-minute, we're still at 37.2650. So your time frame means nothing. Your pivots work basically off of support and resistance, like your opens, your close, lows, and all that stuff from the previous days. And so it's a mathematical formula based on yesterday. And every day they're going to change. So as soon as we open up for Sunday market, these pivots will change according to that based off of the time frame on Thursday. That's the way they work. But pivots are very, very good. I use them on my charts all the time. They're always on there. Hardly ever do I not have the pivots on there. I think that is probably the easiest thing that you can do to trade. Now, if you look at this, you'll see, let me get that back to fixed. We come up, we hit it, start messing around a little bit, come up, start ranging, come up, hit them again, and here we are. So the pivots they're free on NinjaTrader. They work very well. So that's one that I use. And so I'm going to take that one off. If you double click it, and then you can click that off. And another one that I like is Priceline. And let me find it here, the Priceline. And that works off of, it won't show here because we don't have a running data. But the Priceline, as this moves, the Priceline will shoot a yellow line across it. And if we come back into indicators and come down here, you can choose what color that you wanted to work off from. You can run it off bid, ask, or whichever. Now on up here, you're going to put it how you want it. I use price change. As it moves, I want it to show it. So that's how I use mine. But that is one that I like. That way, whenever you're in one of the other videos I showed you how the price line actually went across, you could actually watch it interact with the past candles in order to know what it's going to do as far as like support and resistance lines and so forth. And I'll tell you, I've got some Spybot tools in here that I like, the indicators. And one of my favorite is the Spybot mover. And you can change how you want it. You can do all kinds of different moving averages. And then I like to use an SMA 21. I like it real well. So we're going to change that. And if I use an exponential, it'll bring it a little closer. But I think the SMA actually smooths that out a little bit more. But if you look at this one, a 5-minute time frame, you can see that when we're kind of going sideways with it, it's not good. But as soon as that thing starts rounding up, then that's when you know that you got a good one. But if you just trade it based off of the color change, I mean, if you got in here, you can still make a few points there, and then it started coming back up when we turned green, and you could have stayed in at that point and kept on going. But when it drops below this line, that's a good indication to go ahead and get out. But if it stays above the line, you just stay in it the whole time. So if you'd got in, say when this crossed here, if you'd stayed in it, you can see how it just kept on going. Same thing with right here. As soon as it crossed the line, it just kept on going. So you would have got in roughly 1875, and it went all the way to 2850. So roughly 10 points there, potentially that you could have got. More than likely, you probably would have sold out around 8-9 points. But if it's 8 point or 10 points, that's going to be $500 per contract that you could make on that. This indicator is probably the most sold indicator that I have, and it works very well. So let's go ahead and take that one off, and let's talk about another one. We have the Atr Trailing. This one is a very good one. This one actually shows where the institution's stops are going to be, and that's kind of what it works off from. So whenever you're trading, if you look at this, as soon as it turns blue, that's a good indication to get in. And if we can change that, if we change that up to, say, a 14, I think it's a 14, yeah. So 14 is blue right here, and all of a sudden it just takes off. But when you're going sideways like this, that is all range. But as soon as it breaks out of that, that is your breakout. So that's kind of how it works. The same with the coming down. You're short, right here it's all range, but as soon as it drops down, boom, then it takes off. So you can use the ATR for trading. We actually have a bot that is being made for that. And the bot will actually take trades as soon as it hits blue, and it sells when it turns red. So on this particular one, you would have gotten in at 28.50, and it would have sold at 44.25. So that's roughly 16 points that you would have picked off based on this. So you can trade off of that very easy. You can drop this down to, say, 10, and that'll get a little bit closer. So by doing this, this thing dropped down, but it was actually, turned blue, and it would have got you quite a bit of points right there. So if you got in there, 76 all the way up to, so that would have been 24, 34, 51 points that you could have got right there. So the ATR trailing works very well. We use this on our bots for like an ATR trailing. And so our stop is always, our trail stop is always going there. And then as soon as it comes down and touches it, then it will get you out. So a good example would be like right here. If you had gotten in over there, it would have stopped you out on that one. And the same thing with here. If you were in short, it would have stopped you out on this one here. So, you can use that for that as well. Another one that we have is the ribbon. And the ribbon works very well too. It tells you the consolidation. Like gold means stay out of it. And you can change these to make it a little bit different for you. So let's say you made that a 10. I think it's, made it a 10. You could actually make this one a 5. And that would open it up, keep you in and out of the trades a little bit longer. This one, as soon as if it's yellow or gold, you stay out of it. As soon as it turns green, then you hop in. And then you don't get out until it turns gold again. So that would be a way that you can trade with that. We're going to update this one to make have a line there and a line down here to make it a little more visibly attractive to you so you can see it better. But the gold, this one's called the Spybot Ribbon, and it works off of a bunch of moving averages. And by showing the clouds, it just makes it very, very visible to be able to know to get in or out. Again, you would have got you in right here and then taken off right on up through there. So this would have been a good trade. So if you got in there, 88, and let's just say you stayed in it the whole time, 88 to, so there's 40, 60, roughly 60 points, 58 or 60 points right there that would have got you in. And then, you got your red one there. As soon as you start seeing it gold and coming down, it's getting ready to turn red. So there's 94. It went all the way down to 74. There's 20 points that you potentially could have gotten. And so the ribbon works really well. These are all on our website for sale. So if you're wanting to buy any of them, then you can go on there and check them out. And then we have one called a trigger. It's not named correctly in here, but it's called the trigger. And the trigger, I like this one. I like it a lot. I like to use a 70 and a 20. And I like to change this to, I need to change this to the default settings so I don't have to keep changing it. And actually I'll show you how to do that so you don't have to. And then I like to add the collar region. And then if I do that, yeah, that's right. So we go to the template and we save. We're going to save as default. So the next time I open it, it'll be there. So if I click on this one and then I remove it and then I come back down and then click it, see, there it is. Now we saved it for our default, but every time I have to load it, it changes it. So I need to change that to where it just comes up that way. But if you look at this, you can see that if the candles start going down below this and then it turns red, that is a short. So you probably would have got in about probably about right here. So that's 80, 50. And then to come down, and the trick of it is either there's 3 different ways you can trade it. If it comes up and touches this line, you get out. If it closes inside this cloud, you get out. If it touches this line, you get out. If it closes on this side, you get out. So there's different ways you could have traded it. This one, I would have just kept on staying in it because, I mean, if this is real skinny, then that means it's getting ready to change. When it widens out, that means that, you know, the trade is still really good. So when you come down, you can see how this thing started turning and getting skinnier. When it closed over here and it started going up, I mean, that's definitely a good reversal sign. It did come back down, but you know, you probably would have got down around 80.50, and it went all the way down to 37.50. So that's 42 and a half, 43 points, I think, 42, 43 points that you could have got there. This is a very good one. It works very well. And then, you know, when it crosses over top of it, as soon as it turns green, then that's where you want to be. So on this one right here, it would pull back on you. But when you have this big old drop like that, that is a good sign that you're not going to just V right back up. You're usually going to consolidate. So you got to know how to use your indicators to know how to trade better. But this one actually works very well. I like the mover and I like this one. I kind of like the mover better in a way because the mover is less on the chart. So, but as far as Thursday goes, we can look. You can see there that, you know, I mean, it had a good pop right here. So on this one, you would have actually got in right here. There's 23. It went all the way up to, there's 5 points you could have got. That dropped right back off. Then we hopped in here. So you would have been getting in probably been rolling through here. So there's 24 all the way up to 53. So roughly 29 points that you potentially could have gotten there. So this one's a real good one too. And like I said, it's on our website, so you can buy it on there and install it on your charts. Show some other indicators here that I like. There's one that's the previous day. What is it? Right there, prior day OHLC. Now the way this works is it works off from the previous day high, and it has the previous day close, it has the previous day open, and the previous day low. So these are good support and resistance lines. And if you look at this one, if Control H is the way I have mine set. So if I do that one, you can see that right there is our high. And then we went right up to it and started working off of that again. So it went through, come right back down, retested, popped over. So that is, an area of resistance and support, depending on which way you go. If you go down to the low, we can see that we come down. We almost tested the low again right there. And then yesterday's low, or Thursday's low, we'll possibly come down and test that again tomorrow. So these are really good ones here. Just to know where they are works really well. And there's a lot of different indicators in here. There's the MACD. I'm building one right now that's actually a better MACD. It shows more. It's color coordinated where, when it's rising up, it changes the colors and so forth. It's actually a little better. We're using it in a Spybot MacDaddy. bot that we're building, and hopefully that'll be done here within a week. I've been saying it for a while, but I think it will be done this week. And the histogram and everything is changed. We have where you can change the colors down on the bottom. You can change it on the fall or a rise on the histogram. Same with the MACD line and also the slow line there. So our MACD, I like it better. But it does have it on here, the generic one. And then the RSI, a lot of people use it. We're coming out with one on it as well. That's actually making it better to be able to see it. There's not much information here. We're going to have it to where you can have different settings in here and make it to where it'll have more alerts and so forth on there as well. But to install one, you just go to Tools, you go down to Import, and then you click on NinjaScript add-on. When you click on that, then you just find the file on your computer and open it up and then install it. And then whenever you install it, then it'll show up in your indicator list. Another one that if you're doing a tick, there's a bar timer. So if you click on bar timer and go down here, and if you have this on a tick chart, say it's 100 tick, as the tick chart counts down, it's a 100 tick chart or candle or bar. So it'll start down here on the next bar. It'll show 100, then 99, 98, 97. It keeps on going like that. So that's a real good one to have. A lot of brokerages don't have that one, so I like it. Trying to think of another one on here that I like pretty good. It's got Bollinger Bands and all that. I don't use Bollinger much anymore. I used to all the time. Keltner Channel is pretty good, and it's works off of deviation lines. But when it's staying, when it stays in, right above it, then that's very, very strong. But as soon as it pulls back out of it, it's kind of like a Bollinger Band, real similar. But the Keltners, they work pretty good. I don't use them. I used to use them a little bit, but now I don't use them. And I'm trying to think of some others here that stand out. The order flow. You have the order flow is awesome. You can put cumulative delta on there, so this will show, well, it takes time for it to build because it's showing the delta. The delta is the difference between the open or the buy and sell. So if you had more selling pressure than buying pressure, it may be a negative delta. And a negative delta means that you're in a short position. And if it's in a positive delta, then it's going to be in a long position. So whenever you start seeing this right here, that is a good sign that it's getting ready to start selling off. So when you see this big old drop like that, so the cumulative delta is something you just need to study up on. There's a lot to it. We go back, we'll delete that one out and come back to order flow. This is only available on the licensed lifetime license. That's the only time it's available. This one, the market depth, this one takes forever to load. And it works as it goes. It starts filling the back of the chart. I don't use it. It's too much on the screen for me. Trade Detector. This one was, I don't remember what that one was. I think the Trade Detector is, the Trade Detector is the one that has the red circles and the green circles, and it tells like the order flow. If you see, there they are. If you see these, then it's showing the buy and sell of each candle. So like on this one, you see more green than you do the red, but up here you can see all the selling pressure. Up here you can see all the selling pressure. Then over here, you've got a little bit of buying. You can't really tell much on the end of the day. And then if you come back, if you start watching these, and when you start seeing those little green ones pop up, then that's a good sign to possibly get in. I'm not real educated on using the Trade Detector, but I do know that when you see all the red start popping up, then it's driving it back down. So this one kind of works with I can't remember the name of it now. Starts with a B. There's another, it's similar to order flow, but it starts with a B. I can't remember the name of it. And then if we come down to the other, you got the volume profile. The volume profile is excellent. This one will tell you where the buyers and sellers and so forth are. So when you look at this and look at this 37, 24, 25, that is probably where this is going to come back down to, because this is where all the buyers and sellers are. This was a big old run up, and I think it's going to pull right back down pretty hard. Sunday we'll probably see a gap down, and we're probably looking at the 37.24 on it. This is another area of support, the 16.75, and then this one is a high support or high resistance of 43.75. Usually the price will follow between these, and it will, when it's consolidating, will stay within this one. And then when it comes up, if it starts consolidating, this yellow line will actually move up with it. So all three of these lines will move as the market moves. So as the more buyers and sellers come in, this will start, if more sellers or more buyers are coming in, this will actually move up. So, but to study order flows, if you just start watching it, you'll understand it more. This one's a neat one. Candlestick patterns. You can actually pick, like, you want to see, say you want to see all the hammers, then you can go ahead and put this one in, and it shows that the hammer is right there. A hammer is a very bullish bar. So let's get this one back over. So it's showing that there's a hammer right there, and there was another one back here. Right there's another one showing that there's a hammer there, which is this one here. It's not this one, it's this one. This is your hammer. And then we come back over here and look at that one again. Right there's your hammer. So a hammer is a very bullish bar. So if you put the hammer candlestick pattern on there and that pops up, then that's a good sign to get in. Not always, but it's a good sign to get in. So if you get in here, 37.1750, and that thing rode all the way to 28.50, so there's 11 points that you could have got. I like those, and this one's saying 5 of them found in here. So let's go find them. There's we already looked at that one, and right there's number 3. So we got a hammer right there, and we got another one. See, now this one was a bad one. That was a hammer, but it still dropped. So like I said, the hammers don't always tell you. But if you're looking at, if you know what a hammer looks like and how it should react, like this one I would not have got in because it was a neutral hammer. It's a hammer pattern, but it's neutral. If it was green, it probably would have taken off. But being neutral like that, that's not a good sign. That's potentially going ahead and lowering, which it did. If we come back and look at another one here, right there's another one. That was neutral too, but it actually took off. Usually if they are neutral, they're not that good to go by. It's not a real good one. On this particular one, if you hit that hammer and then it goes up and you actually have a opening above and it closes above, then that's a good sign. If we go back to that one, let's see how it looked again. Well, that's hammer 1. Yeah, that's it. So that took me right back to the one I just looked at. Hammer 1. Hammer 2. Okay. But see how this one actually dropped down below the wick did on this candle? So that's a sign that we still have a lot of selling pressure there. Whenever the next candle opens above and closes above, that's a real good sign that it's going to go and keep on going. We go back, look at this one. See, the hammer is actually, well, the hammer, that's not really a hammer. It classified as one, but it's not really a hammer. But you can see that we opened above and we closed above. That's a good sign that's going up. And then we look at another one here. So if you don't know your candlestick patterns and so forth, this indicator actually helps you find them. I like it real well. I don't use it all the time, but I do use it. Here's another one. Well, that's the same one. 3, and then okay, there's 4. So this one is a hammer, and we opened above and we closed above. So that is a very good sign. So you got to watch how the next candle does, if you get in or not. So it just depends on how it does. Like this one here, there's a hammer. Now see, this one actually closed down below, so I wouldn't have got in, but as soon as the candles come in and this one opened above and closed above, that would be a good one to get in. So just because you see a candle doesn't mean you do it. Another one is if you go into, let's see here, go back to indicators. I've got to open up the indicator, and then we click on that one. Another one is a hanging man. A hanging man is for a short. It's the same thing as a hammer, but it's upside down. There's 2 hanging mans in here, so let's see if we can find them. It'll be up on top. There's one. So we got a hanging man right there. That's not really a hanging man to me, because there's no wick on the bottom, but it's classifying this one as a hanging man. But so it's not perfect, but that's a good indicator that you can watch. You just have to know your patterns and know for sure if that is what you want to do. As far as use, you still need to know trading. Let me look through here and see if there's another one that sticks out to me. No, nothing really stands out, but that's how you use them. I think you get the general idea as far as the different indicators. Again, my favorite one is probably the Spybot mover. The Spybot mover I like real well, and also like the trigger. I like both of those. So I put them both on there so you can see them. And the trigger actually got you in a little bit sooner. I think the mover was more online. And let's see if we go back, we change this move or SMA back to 21. Okay, so there. The mover and the trigger got you in about the same time. Now the trigger would have kept you in this trade longer than what the mover did, so the mover would have got you out of that a little bit quicker, which I like. I like quicker scalps. This one here, they both got in about the same time, and then when it come up, it's actually getting you out well before this one is. So this one will get you out at 7:08, and this one will get you out at 7:02. So the mover seems like it picked it up a little better. Of course, you can change those settings and pick the one you want. I just like I think the mover personally is just less on the chart that I have to look at. And if you have all your other stuff under your pivots and stuff, then it makes it a little bit harder to see them. So when we take the trigger off, which I do like really well, but when we take that off, you can just see better. I don't like a lot on my chart. So if I can just get by with like one little indicator that I can use, and then just use the price action according to that, and then trade it, then to me that's the best one. We have this one also. If you're into TOS, we have the indicator for TOS as well, so it's on there, and it has audible and visual alerts with it. So that's pretty much about it with the indicators. Showed you how to install them, how to use them, pick them in your chart, and also how to get rid of them. So if you have any questions, anything, let me know. Thanks.